Good afternoon, Quasar Markets Live. I am back for our midday report and look at the charts with our man, Mark Petrino, CMT, a chartered market technician. Thanks for joining us. How you doing today, Mark?
Oh, my pleasure. I'm doing pretty good. It's been really cold up here, and it's finally going to be above 30 tomorrow. So, kind
Well,
of
that's a
looking.
bonus. Yeah, it was 9 degrees here where I am this morning. It was definitely chilly. Market's not so chilly. They're heating up today for sure, huh?
Yeah, I got to tell you, like this morning, I looked on a website which I won't mention, but it's but it's a popular one that could end in BC. But yeah, it's funny, and this kind of frustrates me. All right, I'll say it. It was CNBC. So I don't watch CNBC on TV, but I every now and then I check out their website, and there were all these stories like, what drove yesterday's sell off, what investors are thinking about yesterday, and I was like, what are you talking about? What sell off? The
Yeah.
S&P was
Oh,
down like
yeah. They act like the world blew up last night, and you're down, a little bit, not even a percentage point.
yeah. So like if you're not someone who works in the market and you were to see a headline, you would have thought that like, the market crashed yesterday and it barely moved. And I find that frustrating. And that's one of the reasons why I focus on education now, is because I think a lot of people have lost a lot of money because there's just so much noise out there. And it's everything from, there is good analysis out there. There's also analysis that sucks, but the people that are doing it, they think they're doing a good job or they're trying hard or whatever. They just don't have the experience. And then there's people that are like downright frauds that'll
Oh, yeah.
just blatantly lie.
That are
And
looking for liquidity. They're just looking for exit liquidity.
yeah, like I saw this headline one time, this penny stock newsletter, which actually came in the mail, believe it or not. And it's like, the stock I recommended last week doubled. And I was like, all right, well, I'm a stock guy. I got to check it out. So anyway, it was this penny stock. And for everyone who doesn't know, right, there are two prices in the market. There's a bid price and there's an offer price. If you go and sell at the market, you're going to receive the bid price. If you buy at the market, you'll probably pay the offer price. That's called the spread. You can see on a stock like this or shares like this, the spread is razor thin. And even though it says 37, 39, there's probably millions of shares in between there that we don't know that aren't posted.
Right.
But basically what happened with this penny stock was someone sold shares, so it traded at 1 cent, and then someone bought shares, so it traded at 2 cents.
Yeah.
So on paper, the stock doubled, and in reality, it didn't move, right?
At all. Right.
Yeah. So it's just blatant misrepresentation or fraud or
Yeah,
whatever you
we
want to
talked
call it.
about it this morning on our show, with Big Beat and with Stephen Flanagan about that exact thing is where, there's so much misinformation out there or information that's sort of just meant they're in entertainment purposes. CNBC is there for entertainment. They are not there for education. What we're trying to provide is people that can look at that and say, wow, well, Mark, I can see at 610, there's a pretty strong resistance spot now, and I can see the bearish flag coming up. What do you got for me? That's what we want to be able to bring to people. What do we have going on? What are the charts telling us? What strategies are going to work? We don't tell people what to buy and sell, but we show you the strategies in the way that our thinking is going, that traders with years of experience at a retail and institutional level are looking at right now.
And one thing people that are in the retail world, I think, really need to learn is you got to develop a style that like fits your own personality.
Yeah.
If you're everyone is different. I've worked with people that love, to me, it's kind of boring, frankly, but people that love delving into like the company numbers and the earnings reports and the balance sheets. And it's almost like they're like a forensic detective. They're trying to find stuff that no one, else sees that might say, you know what? Analysts are saying this guy's they're going to report 20 cents a share. That's based on my calculations. They're going to report 25 cents a share. So I'm going to go out and buy it ahead of those maybe.
Absolutely.
And I like one of my oft-used, probably overused analogies is if you made Tom Brady a linebacker, he probably wouldn't have been that good. You know what I mean? But as a quarterback, obviously he's, probably arguably the best quarterback ever. Yeah. And are you a Pats fan?
I am. I grew up in Peabody, Mass. So
All right, let me put something out there that you might find controversial, or you might uh, agree with me. I think Bill Belichick is the most overrated coach in history. Without
it's
Tom
up
Brady.
there. It's up there because Brady proved that it was him. But yeah, but he had what he had was brash. You know what?
Yeah,
And he took a chance on a guy that nobody even knew who he really was, except for that he had been beat out by Drew Henson.
but
Um,
but he has he's got a losing record without Tom Brady
Yeah,
playing.
outside of that run, he did not. Yeah, he has not done much. Yeah, he left the franchise in terrible situation. So,
But now
but
he's
it's one of those ones where for me, it's a half of it though. He still won the Super Bowl. He didn't get enough in the way. I've seen other coaches get in the way enough that they destroyed great teams. He never did that.
yeah. All right,
Yeah.
all right. Anyway, let's try to stay in the markets here. But so I'm a little bit caught off guard by this action, but I guess I'm not really. I don't know. I mean, I do a bunch of calls a day, but I probably talked about this yesterday with you. That I think the most important thing to watch, what was really driving the market, was what was going to go on in the technology sector.
Yeah,
And this is where this weakness is coming from. So we got this
absolutely.
big move lower. So this tells me that Microsoft is weak because Microsoft was holding that 262 level, which I remember that we talked about yesterday, and that's one of the reasons why we had this strength. So for those of you who don't know, the S&P consists of 11 sectors, and at different times, different sectors are what I call in the driver's seat. Like for example, down here, hypothetically, the tech sector was not in the driver's seat. We're trading in the middle of a range. The momentum is neutral. Here we get up to a place where, it's kind of important to pay attention because now tech is in the driver's seat because it's gotten to an important price level. And when something gets to an important price level, that's when it tends to move. If there is no news out there, the only thing that moves stuff in the short term is psychology and technicals, right?
Yep.
So this was the key to watch. So now, if I was trading professionally, which I'm not, but if I was, I would have been watching this. And once this started to fade, I'm going to put up the 1-day chart here. I mean, I know hindsight's 2020, but once you got into here, you're kind of like, all right, it's 10:15. The market's still trending lower. Usually, if there's a trend reversal, it happens around 11:10 or 11, which it didn't. So yeah, so that's that would have
Just
been
gonna melt
this.
away if it doesn't at that spot, like you're saying.
Yeah, so if you were like what we call like a proprietary trader in the institutional world, those are people that are given money and they can just go out and trade and they keep part of what they make. When people say trader, there's almost an infinite number of different kinds of traders. But if you're a prop trader and you're someone who's a momentum trader, that's the type of thing you would have been watching. You would have been saying, all right, Microsoft is kind of driving the tech sector and the tech sector is driving the market. And today's action in Microsoft is weak. We opened up here and now we're towards the lows of the day. So it's important to understand that at different things, different times, or at different times, different things are important. Sometimes the financials are in control, sometimes it's consumer discretionary. But being a successful trader is not just understanding all the strategies, it's knowing what to watch and what's important at what time, because as the market evolves and moves on, it's this ongoing narrative. Different things become important at different times, and things that are important become less important. So now if Microsoft is to, over the next day or so, drop back down to around this 407 level, then I would say, well, this is something to key in on, because whether you're trading NVIDIA or Apple or whatever you trade, what goes on here is going to affect the entire market. So we get down to there, Microsoft bounces, then there's going to be some ideas on the upside, right? If this
Do
support
you tend to
breaks, well,
watch all of the Mag 7 for that? Or are you honed
um,
into one or two of them more than the others?
well, let's go through them right now. Let's look at NVIDIA. Yeah, so now NVIDIA, I don't think we're really going to get a signal here. Not surprising, though. We can see some of our basics, right? Support levels that were support can become resistance. And this is because we have people who bought who regret doing so when the price goes lower. So when they say, when it gets back to my price where I bought at and I can get out at break even, I'm going to. So remorseful buyers from here, placing sellers here, created that resistance. Same thing here. We break the resistance, we move higher, and remorseful buyers from here created the resistance over here. But I would say right now, NVIDIA is kind of neutral the way I look at it. I don't really see it doing much unless there's some kind of news that
We
comes
do have
out.
earnings next Wednesday.
Oh, okay.
So we will see something, but not till mid next week. But you will at that point.
Yeah, Apple here is looking pretty good.
Yep.
See, now if Apple clears this level right there, that's
a hold over there is strong.
Yeah, so this is something to watch. And what's important to for those of you who don't understand why certain, I mean, I know, it's more popular and more people are watching NVIDIA than watching, I don't know, International Paper or whatever, some boring company. But if you look at the S&P 500 breakdown, remember the S&P 500 is 500 stocks. Apple, NVIDIA, and Microsoft together are, I don't know, almost 20% or a little bit more than 20%. So you have these three stocks that are 20% of a 500 stock index. So just by definition and just by the way these things are calculated and so forth and so on, these three guys could potentially affect the entire market because they can move the S&P and then the S&P can move whatever it is that you're trading.
Everything else with it, right? Because it sets sentiment.
Yeah, exactly. All right, let's look at Google. I notice I say Google and I say Facebook. It's my little way of getting back at the man. The Zuckerberg man. My niece went to Country Day in Greenwich, and I went over there for graduation. And those twins, man, that he stole the idea from.
Yeah, Winklevoss.
The Winklevoss. They were like champion rowers there. So there are pictures of those guys everywhere.
They've done okay for themselves with Gemini and Bitcoin.
I'm not really feeling too sorry for them. And frankly, if you could go to Country Day, you're probably coming from some money as well.
Some money anyways. Yeah, they did absolutely come with some silver spoons involved there too.
Yeah. But now Google looks kind of interesting and you can see why, right? This was a level that was resistance. And when the price went higher, some of the people who sold here are like, if it ever gets back to my price, I'm going to buy my shares back. So on this sell-off on Wednesday of last week, it became support, and it's been support since then. But today it looks like this support could be breaking. So this is something to watch. And importantly, we're potentially breaking support above price levels that we gapped up through.
Right.
So one of the main reasons why we just discussed is that you get support is you get remorseful sellers trying to buy shares back. When you gap through these price levels, there's no trading. And if there's no trading, then by definition, there's no one who sold who's going to be trying to buy back on the way down. So if you hear that old saying, gaps refill, this is what it alludes to. There might not be a significant amount of buy interest in between these price levels. We're going to call them 175 and 182. So if the sellers come in here and start hitting this, they might not be able to find a lot of buyers, in which case they're going to have to offer their shares out at a discount, and that could force the stock into a downtrend. So, as a matter of fact, that's something I was looking at over here. I mean, I know it's not a Magnificent Seven, but Axon.
Yeah.
I mean, so it's kind of the same idea here, right? We gapped up through these price levels, and as we fall back down into them, I mean, I think it's safe to say that this support here is broken. And my guess,
absolutely, especially another close there for sure. If it closes today, you're looking for that to fill the gap all the way down to that 445, 446 level.
Yeah. So I mean, this is what gets us excited, right?
Absolutely, and that's what we're saying. That's what I'm saying about being patient too. I'm more of a person that want to see a close tonight at that level, below that level, and then that kind of gives me the reassurance that we are going to see that fall.
It's like the guest you have. I don't recall her name, but the guest you had last week.
Agnieszka Wood. Agnieszka.
Yeah. And she talked about, how important it is to have the discipline to know when to stay out of the market. I mean, I think a lot of times you got to ask yourself, or people need to ask themselves, like, why am I trading here? Do I really want to make money, or am I just doing this to entertain myself?
That's a great point, because I do think sometimes that's the case where you see it where people do that. And the more and more of professional educators like yourself that I talk to that say the same thing. We were talking with Todd Horowitz, Bubba, yesterday, and he made it clear he does a live trading show for his clients, and in 8 hours he found 4 trades over 6 days. You know what I mean?
Yeah.
That's all he found. It didn't hit it. It didn't hit him, so he didn't make a trade. You know, you don't hear amateurs, you don't hear retail traders say that.
Yeah, exactly. And it's like Jesse Livermore said, right? You know, we talked about this last week.
Yep.
He made his money not by being in the market. He made his money by being out of the market. And I think that was his way of saying he had the discipline to just wait for some good ideas to come along. And, you know, if nothing comes along, hey, man, there's nothing wrong with taking a day off, you know, take your dog for a walk or, you know, do something
Yep.
else, right?
Yeah, I this week I did some cash secured puts on IBIT and some things because I was waiting for an entry. I got paid to wait for my entry. It didn't come. I'll wait next week. I'll look again. You know?
Yeah, like what I would recommend to people is you have a list of stocks that you would consider set up. All right. Now let's just think about the race. You get the starter that goes on your mark, get set, and go. So these are stocks that are at the get set phase, but they haven't gotten to the go yet. Now this I'm looking at is kind of the opposite of Axon. This is something that's testing resistance below a gap, right? Axon was testing support above a gap. This is testing resistance below a gap. So I would put this on my radar screen and I wouldn't trade it, but you know, if we get up to 78 or so, that's where I would think about jumping in. And you know, I would have on my Excel sheet how far we are away from our trigger price. And if it's like, oh, if it's 5% away, you don't need to pay attention. But oh, we're 10 basis points away from our trigger price. Let's go take a look at this. So have a list of stuff that's set up. And it might be 10 things, it might be 20 things, it might be 100 things. Well, 100 is probably a lot, but
yeah, it's a little much.
Yeah. Yeah. So just, you know, have your stuff that's set up and you know, maybe one day you get 5 triggers and you pull 5 trades. Maybe the next day.
And I see you use TradingView, which I also use and love. You can set those alerts to those exact parameters just over there on the right.
Oh,
so
really?
it will warn you before it clicks.
Yeah. Okay.
Yeah, if you hit the one to your right, keep going to your right, and you'll see there's a the one that has the time, the clock.
Oh yeah. Okay. Oh, cool. Yeah, I'm a bare bones kind of
your
guy.
Alert. You can set it by crossing MAs or approaching MAs. You can do it to an actual figure. I want it, you know, 78.50. When it passes that, give me a chime. I use them all the time for that. I set up, like you said, in the morning. I get up early. I'm up at 6 a.m. I set 5 or 6 of those for setups that I like, that I'm going to be patient on, and it tells me when I'm ready.
Do you use a lot of moving average crossover strategies?
I do both. Yeah, I do use some. I'm more looking, you know, for my long-term investing, which is what I've been trying to build up. I'll sometimes just look for a 200-day MA as, you know, something that is approaching 0 to 3% above a 200-day MA to trigger me there. I have one of those set up in there as a screener. But I also like to use super guppies for short-term day trading. So I use an EMA over an SMA.
Yeah. Okay. Well, so just so people out there know, I'll just kind of describe what the moving average crossover strategies here. So these are just 2 simple moving averages, the 9-day and the 20-day. I'm just picking these just, you know, just for an example. But let's think about this. The 9-day simple moving average of a stock is the average closing price of the last 9 days. If the stock is above that, there's a good chance that it's going higher. Right. The long term, in this case, the 20-day, is the average closing price of the last 20 days. So if the short term average is higher than the longer term average, there's a good chance.
Momentum.
Yeah, there's a good chance we're in an uptrend. If the short term price is lower than the long term price, there's a good chance we're in a downtrend. So a moving average strategy has definite advantages to it, but it has weaknesses too. And you can see right here, a moving average strategy tends to catch the long trends, but if you go into a sideways market, you tend to get whipsawed.
Yeah, you get closed out on either side.
Yeah, and that's but again, the idea of having a trading system or strategy is to take the guesswork out of it. And nothing is perfect. And if it was, everyone would use it, right? And I remember back when I was at SAC, hearing Steve Cohen say that their best traders, and these are like literally, no exaggeration, like literally some of the best traders in the world, okay, that the best traders make money on 2 out of 3 of their trades. So
Yep.
that means they lose money or break even on 1 out of 3 of their trades. So even the greatest traders in the world make mistakes. I saw a lot of times, I remember very, very vividly, where Steve would come in the morning and, be like 9:15, and he'd be like, all right, let's go buy this, buy that, buy this, buy that. And then like at 9:32, he would see something that change his mind and just, all right, sell that, short this, short that. Like he had that ability to change on the dime. And a part of that is ego, because a part of it is being able to admit to yourself, hey man, I was wrong.
Yep. Absolutely. That's the biggest problem is you'll see so many traders that ego, and that's what we were talking about with Agnieszka the other day, gets in the way. They refuse to lose, and that compounds and compounds and compounds. And what should have been just a small loss, like you said, over 2 or 3 minutes for Steve Cohen, is a multi-day loss that wrecks the account of a local retail trader.
Yeah, and trading is like, I've seen people that have gotten like destroyed. I mean, like, like literatively and figuratively. Like I knew a woman who was a real nice woman, and she got caught up in the Reddit bubble, and she was a teacher, and she had like a $200,000 account, and she like, blew it all.
Blew it completely up.
And, and I saw her, and she, her complexion was terrible. And like, so not only did she ruin her account, she like ruined probably a good chunk of her mental and maybe even physical health.
Yep.
But that's someone who, got an easy trade or two on Reddit and was like, hey, this is easy,
Yep.
And that initial success could contribute to a long-term.
It can be the worst, and that's why we also say don't be loyal to any one stock either. They're not loyal to you. You're not married to a stock.
Yeah. Oh, yeah.
There's thousands of others to find.
Yeah, exactly. So here's Facebook, and just using those same moving cross averages. So I don't know. Let's just go back there. So you would have bought like right here, and you would have sold there. That would have been a good trade. And you would have bought there, and you would have sold there, and that would have been a good trade. And then you would have bought there, and now you would still be long, but we're probably getting close to the close, but or closing out. But that's the thing about moving average strategies. People like them because they're simple to understand, they're simple to test. Every trading software has them, but in the short term, if the market's going sideways, there's a lot of whipsaws, which means false signals. But
yeah, they're good for long extended bull or bearish markets, not great for volatile markets.
Yeah, they like look at this. See how it caught this long-term trend. So you would have bought Facebook around 331 in December of 23, and then your sell signal comes around 505 in April. So it takes the emotion out of it, and that's really kind of what we're trying to do, right? Is to take.
I find them that they're good. They're a good spot for me to start to look at something. You know what I mean? As I'll use that crossover, whether it be the 50 and 100 or 20 and 50, and I'll use that as a spot to say, okay, let me know what did that, and then let me go look at a price action from there and other things to make my decision. So, that's what I find the crossovers are good for.
One of the ways I really like to find trades is I just go to the screening thing here on TradingView. Let's just go to look at stocks, and all right, real simple. Let's just see if we could find some oversold stocks that are at support. So we're just going to click on oversold. And now we got to be careful here because sometimes something might only trade 1,000 shares, or sometimes it might be a real penny stock. But all right, so I don't know what FLD Holdings is. It's traded 275,000 shares. So let's just go take a quick look at it and see what the hell's going on over there. And you can just kind of eyeball some of these things. You don't need to have like this advanced AI modeling. What the hell is that?
I don't know about you, but that one looks a little rough to get involved in.
Yeah, I think we're gonna.
And I know that they only went public a couple of days ago. That was a SPAC. That was a SPAC that went public. So be careful.
Oh, okay. So now that people are bailing out.
Yeah.
All right. Let's find something that is
an actual company.
Yeah. Right. Let's take a look at Tetra Tech. So, this is an example of not guessing. This is an example of, what did I do here? I get it. I screwed it up somehow. All right, let me just put that in. Yeah, so this is an example of not guessing. We're letting the market tell us what to do. Now, you can see it's obviously oversold. Let's see if there's a level there might be support. And right away, look at this. We know that markets like to find support at former support levels. Yeah. So we're almost there. I mean, we're really oversold, and we're basically at a level that was support before. So I would have this now would be on my radar screen for
absolutely.
This is a trade that is set up, but it hasn't been triggered yet. So my trigger might be something as simple as if we cross above this trend line, that's when I jump in, and I'm not going to do anything until that happens. Right. Now, the good thing about having a strategy like that is it's just going to keep you from getting run over. I don't know if we talked about the trade desk. What is that?
TTD. Tom David.
TD. So I'm not sure where we talked about this, if I talked about it with you guys last week, but this is a perfect example, right? Here's a stock that got crushed, and it landed at a level that had been resistance before, that converted into support. So there's a good chance there's going to be some support there. And sure enough, there was for 2 days. But now it keeps going lower. So we never would have taken this trade because there was no trigger. What I like to use for a trigger is, let's see, this relative strength index. And the trigger is, all right, if this line here, the RSI line, starts to turn up, it means conditions are getting back to normal. Oversold means people are just really, aggressive, they're emotional, that they're bailing out, they're afraid.
Yeah, capitulation. I've finally given up. I've held, and now it isn't bouncing. It's that Reddit lady you just talked about.
Exactly. And so this trade wouldn't have been taken because it hadn't been triggered. Notice how the RSI is still going down. So if the RSI starts going back up, what's that going to indicate? Well, that's going to be an indication that things are kind of getting back to normal. And if something's going down, what's the first thing it needs to do before it goes up? And the answer is it needs to stop going down. Yeah. So this was a setup trade. And I guess you could even argue that it still is, but it never got triggered. So I wouldn't have taken this trade and I wouldn't have lost money.
Yep, absolutely.
Some people are just trying to catch the bottom, and it's like,
Yeah, you have to let it settle down. Yeah, and I can tell you that from Bitcoin over the years is if you think the first drop or even the second drop is the last drop, you're wrong. It can continue to drop, and it did, many times, and that's where you have to be careful is for those false signals.
Yeah, there's Bitcoin there. Yeah, people, when the market crashes, like back in the internet days, there are stocks, and the same thing in the Reddit days, and even in some of the crypto things, that lost like 95%, And I remember back in the Reddit bubble, me talking about how similar it was to the internet bubble. And someone said, well, a lot of companies survive, like Intel, Cisco.
But they never earn back where they were.
Yeah, people are like, well, this is different, or the internet bubble was different because those companies actually earned money, whereas like a crypto doesn't. But guess what? When the market crashed in 2000, Cisco was down more than I think about 80%. Microsoft was down about 60%. So stocks can go up way more than you think they can, and then they can go down way more than you think they can. And not just stocks, I mean, markets in general.
Absolutely.
But here's Bitcoin. Yeah, it looks a little, I would say a little neutral here. And you can just see,
it really is. You could sell me to either side of it right now. I've been trade in a range trading it basically from that 92 to 100 rinse and repeat lately. Has sort of been the run that it's at. The sort of fundamental part you have to watch is Saylor just raised $2 billion in a convertible bond this week, so he'll start to buy. He likes to do it on the weekends when liquidity is low, even though he uses an OTC, and it tends to hit the news on Monday or before Monday morning. So we'll see.
Yeah, oh, that's pretty interesting.
But it's in that middle zone right now. every time it hits 99 right now in general, it's had trouble. When you look at that daily chart, you can see.
But I think, like we're looking at a crypto, right? Which couldn't be more different than some of the other stuff we looked at. But you see the same patterns. You see the
Yeah. Oh,
resistance.
yeah. And I was a doubter. I remember when I first started buying Bitcoin, back in 2013, I wouldn't look at charts. Well, it was also tough because it only went one way at that point when I first got in. But, I would have told you technical analysis doesn't work for Bitcoin. It only works for companies and blah, blah, blah. And I've now learned it works on everything, every commodity that's out there and everything that has a price.
Yeah, like let me show you this, which I find to be absolutely fascinating. And if you could see behind me, there's a lot of books. I'm a big reader, and I especially like history. And I think if you understand history, it actually makes you a better trader because you understand that there's really nothing new going on. The names
Yeah.
have changed, so forth. But this is the Dow Jones going back to I did this on St. Valentine on Valentine's Day. That's where the St. Valentine's massacre occurred, by the way. Um, but look at this, right? So let me just clean this up a little here. Sorry about this. Actually, you know what? I could just go use this garbage can down here. All right, so this is the Dow Jones in 1904, and look at where it found support in the crash. The same level that was the bottom.
Absolutely.
Right? And you can look up here, and you could see the level around 99, or I guess 100. Right? People said, "Hey, if the Dow Jones gets to 100,
round numbers."
Resistance in February of 1906, December of 1909. Now, and here you can see again support at the same level of support. Now, a lot of things have obviously changed since back then, and I doubt anyone who's listening to me right now is trading in 1906, unless we got like one of those time traveler guys. But charts form because of human emotions, right? You get resistance at former resistance levels because of buyer's remorse. People buy, and then the price goes lower. When it finally gets back to their price, like I can get out at break even, I'm going to. You get support, former support levels because of seller's remorse. People sell and they're like, it went up. If it gets back my price, I'm going to buy my shares back. So even though the companies have changed, the names have changed, the technology has changed, what hasn't changed is human psychology. And if you look at a chart the right way, that's what you're looking at. I mean, you can even see it here, right? 1899, resistance here. 1901, support over here.
And they didn't have a computer with a chart like this in those days.
Yeah, I mean, I would imagine there were people that did it by hand. But yeah, it's one of these fascinating things that, to be perfectly honest, I still don't fully claim to comprehend it, because considering how long I've been doing this, this stuff still amazes me. Like, here's the Dow Jones, right? So the Dow Jones first got to 1,000 in February of 1966. It didn't cross it until December of 1982.
Yeah.
So
yeah.
So for all the the whole buy and hold strategy, well, if you bought in 1966, you wouldn't have made money until here. And people say like you can't outtime the markets. It's like, you know what? There's a lot of people living over in Greenwich in big mansions who outtime the market.
Yeah, absolutely you can, because that's what we've seen. Even Microsoft, right? If you bought Microsoft, I believe, a year ago, and you look at it today, it's in a similar area, if I'm not mistaken.
Yeah, let's see here. But it's really fascinating, and if you if you read, like I got a book who was, I forget the guy's name, but he was the president of the New York Cotton Exchange, and this book is from the 1840s. It's not an original, obviously, but it's the same stuff we talk about now. It's stay with your winners, right?
Yep.
Cut your losses short. I mean, it's the same stuff that people talk about now. If everyone's on one side of something, you should think about being on the other side of something, right? So human nature hasn't changed, and the markets are really just a reflection of human nature. And in my opinion, I don't think people. I think people, I guess, just take it for granted. I mean, Microsoft is a $3.07 trillion market cap. Today, it's down 81 basis points. 80 basis points on 3 trillion is a lot of money. What
Yeah.
happened today that made Microsoft lose so much of its valuation? And the answer is nothing. The only thing that has changed is investor perceptions.
Yep, that's psychology of the investors, like you said. That's all we trade on. We just represent it in arrows and bar charts.
Yeah, and like in our culture, technical analysis is kind of mocked a little. In in Japan and in India, they take it very seriously.
Yep.
And what gets me is people mock it and whatever, but look at fundamental analysis. Like every bubble in the history of mankind was justified by some kind of fundamental analysis. You know what I mean? There's plenty of fundamental analysts that lose a lot of money, or fundamental managers that lose a lot of money.
Absolutely.
So this is kind of my analogy for what we do as short-term technical traders, right? Now let's suppose this is the year 900, and we haven't died of the bubonic plague, and we're at some like country market over there in Europe somewhere, right? So all the farmers and all the customers come from all around to go to this one market. Now let's just say there's only one way in and out of the market. And one morning, one of the people that is one of the vendors or merchants says, you know what, I'm going to go check on how many wagons of apples are coming into the market this morning. And it's like, there's only only 2 carts of apples. The typical day we get 10 carts of apples. So it seems like there's going to be a shortage of apples, which means the price will go up. So
Yep.
this person might not know anything about apples, but they know that the market usually gets 10 carts of apples. Today there's only going to be 2. People are going to drive the price up. So that market or that merchant would go back into the market and just buy up the apples. And when everyone else starts buying the apples, then he would just start selling them. So that's
Yep.
what we do. We try to take advantage of short-term imbalances in supply and demand. It's really just kind of that simple.
Yeah, absolutely. I love it. That is great advice and great analysis. Thank you, Mark, so much for joining us. What is your last words of the day here for us as we head into the weekend?
I would just say very important, have a reactionary mindset. Let the market tell you what to do. If you don't see anything one day, it's okay to not trade. If you're playing golf and you're hitting your driver into the woods 50 yards like I do, well, maybe off the next tee you play a 5-iron instead of a driver.
Absolutely. I'm with you on that one, especially with losing it to the left. So, Mark, have a great weekend. We'll see you next week here on Quasar Markets Live.
Okay, thank you guys, appreciate it.